World headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
And after the FTX fiasco, the potential bankruptcy of BlockFi, how do institutional investors calculate the worth of cryptocurrencies? We have a key VC voice.
And the US might bring Sam Bankman-Fried stateside for questioning after tweeting he plans to meet with regulators in person.
Plus, SpaceX is fundraising at a valuation upwards of $150 billion, double what it was in February 2021. We have the details from Bloomberg's exclusive reporting. But first, Ed, let us check in on these markets, because this was a day of macro rather than micro. This was a day of producer prices showing some cooling. Has inflation peaked? That is what is driving, of course, once again, buying in the S&P 500. We're up 0.9% on the day. The NASDAQ, big tech, once again, your outperformer of choice on this hope, this prayer, this utopia that finally inflation might be passing its peak. And we see the NASDAQ up 1.5%. Let's call it, interestingly, Cathie Wood, she's buying the dip when it comes to Grayscale's Bitcoin trust. So we're seeing ARK Next Generation Internet actually up more than 4%. And the fact that she's buying into GPTC on the back of that dip of late, seemingly showing some confidence in the world of cryptocurrencies. Let's just go on to that, because I want to show what's happening in Bitcoin, because it did in fact rally. We saw a steadying of the nerves when it came to the OG of the crypto world after the last 2 days of up about 3.2%. The issue, though, here, Ed, is this is a story of dollar weakness on the back of that hope that the Federal Reserve won't have to hike so fast, rather than perhaps Bitcoin's strength.
Yeah, and that mentality, a massive driver of individual stocks on Tuesday. That said, we've got some breaking news crossing the Bloomberg in the last hour. Apple is preparing to source semiconductors from a plant in Arizona. That's according to remarks reviewed by Bloomberg News made by Tim Cook to employees in Europe. This would be a big shift for Apple, of course, away from its supply chain base, predominantly in Asia. We'll bring you more on that story of Bloomberg's Mark Gurman later in the show. Elsewhere, that cooler than expected growth in US producer prices really boosting tech stocks. You look at names like Apple, really rebounding up 1.2%. Amazon had been up more than 5%, but pared its gains to close up by 0.5 percentage point. The other big story is it's 13F season, right? The latest regulatory filings, SEC filings showing that Berkshire Hathaway and Warren Buffett's firm building big stakes in both the US ADRs of TSMC, the chip maker, and also Paramount. You look at the strong reaction in those stocks. In the private markets, big story we're tracking, SpaceX, according to sources, starting early talks with investors to raise more money. But here's the thing, at a valuation of $150 billion, at a valuation higher than its previous $125 billion, could be in the form of a primary, could be in the form of a tender, all subject to change at this early stage. But a really interesting move we're seeing in the private markets from SpaceX, Karen.
Absolutely brilliant scoop coming from none other than yourself, Ed. Meanwhile, well, let's go back to the private markets and let's go back to FTX, the debacle there. American and Bahamian authorities thinking of bringing Sam Bankman-Fried to the United States for questioning. This, according to 3 people familiar with the matter. I'm pleased to say Bloomberg's Katie Greifeld is here with the latest in the unfolding, whether it's a tweet storm, whether it's the mystery that continues. But it does seem that he might have to pay a visit to the US.
It does seem so, and just judging by his tweets, and the man has continued to tweet through all of this.
And delete tweets, we're also speculating on.
Yeah, it seems like he wants to keep his numbers steady for whatever reason. But he did tweet this afternoon that he's meeting in person with regulators. And like you said, he's already met with regulators in the Bahamas. Now, thanks to that fantastic Bloomberg News scoop, we know that the U.S. is interested in meeting with him as well. We know that the Office for the Southern District of New York in particular has been investigating and interested in meeting with SBF. So we'll see what comes of that. As we know, there are approximately 1 million questions here and roughly 1 million creditors too.
Right, and the other question, Katie, is contagion, right? This is having a spillover effect to other startups, other names in the crypto space. What is the risk to other names that you're hearing about right now?
Well, biggest among them, of course, is BlockFi. That was Wall Street Journal reporting today that BlockFi is preparing to file for bankruptcy. We know that withdrawals have been halted, so that's one big name, one developing story very much in the public, and really the other lenders as well. We think about Alameda, for example, one of the biggest borrowers out there. You have to imagine that other crypto lenders are having very serious conversations right now. BlockFi, obviously, front and center there.
Contagion, the story. What's interesting, though, is maybe this isn't the death knell for crypto and indeed the embrace by certain institutions in the US of it. A digital dollar is apparently what Wall Street is currently about to pilot. And we actually took to you, our audience, we're pleased to say, we went to them with a poll on Twitter and we asked them whether this is a good idea, whether it's not, whether the New York Fed and some of these other banking institutions are indeed analysing digital dollar, going to be piloting the scheme. And overall, they seem to say it's not a good idea. 43%, it was relatively close, but we like coming out to our social audience to engage them, to ask them whether the New York Fed and banks should be testing out digital dollar. What did you make of this story?
Well, I think that part of the reason that maybe that we're seeing that response in the polls, it's because what is a digital dollar? Is it a stable coin? Is it a central bank digital currency? So I think definitions are important here. And it's important to note that this is just a test, what a digital dollar would look like. And at least with the digital dollar, I mean, crypto, one of the big questions are use cases. Digital dollars they have a problem that they're trying to solve, which is sort of cross-border payments, which can be very cumbersome, trying to switch between fiat currencies and multiple payment systems. So it makes sense that, the Federal Bank of New York and also these banks, these payment companies would be interested in at least trying this out.
All right, Bloomberg's Katie Greifeld, thank you for the update there. Let's continue the conversation with Andrea Lamari, partner at Manhattan Venture Partners, a research-driven merchant bank and venture fund focused on the secondary market for late-stage and pre-IPO companies. You have some exposure to the world of crypto, principally through Coinbase. What is your assessment of what's going on? What is your worry about Coinbase?
Well, generally, I would feel as though what we were expecting through FTX was for them to be the white knight for the crypto industry, right? We wanted them to be the regulated body, at least domestically, but what Coinbase is proving that they have already seized the day when it comes to being regulated and being the trusted exchange. Overall, what I think Coinbase is in a position to do is now increase their margins on their trading revenue because they will be considered trusted across the board.
Why did venture capitalists who got into this industry early and other investors not see this coming? I thought the whole point of cryptocurrency markets and the underlying technology was transparency.
I think now the world of decentralization is moving to a world of verification.
Okay.
And that is the position that many of us in venture are looking to abide by going forward, is we all want DeFi to be the new world of shaking up the financial industry, right? But overall, there clearly just isn't enough trust in it at all. So where we see the world going is verifying that assets, smart contracts, everything surrounding the world of crypto and blockchain becomes verifiable before it ever becomes decentralized.
Andrea, of course, yourself a merchant bank, but also a venture fund. How hard is it going to be for new areas of growth within crypto to keep on raising funds in this environment? Is everything on ice?
Overall, we're all looking to see that there's now an audit trail and true due diligence that's going to be occurring in the crypto companies going forward. There's a lot of companies building in audit. There's a lot of companies building in traditional finance where there might be exchanges, right? Companies like blockchain.com that are building strong exchanges but are building traditional finance products around the exchanges, like lending, debit cards, and credit cards, where we have a lot of faith in where the industry can go.
I want to pivot a little bit. SpaceX, Bloomberg News reporting on Tuesday, they're talking with investors, early stage, could be a primary, could be a tender, but the pricing puts valuation above 125 billion, perhaps at 150 billion or greater. You have some exposure to SpaceX. What's your take on that? That's lofty when it comes to valuations.
So Starlink continues to grow at a clip that's even higher than we were all expecting, which is very promising for us. We're looking out for a launch at the end of this year that I think is incredibly promising for all of us. But overall, it's always going to be an Elon premium. The cadence of fundraising for SpaceX is regularly every year. And so whether we see it be a new primary round or a tender offer in the form of secondary stock,
right,
I think generally it's keeping up the momentum following Twitter and realizing that Elon can just continue raising at that premium.
Okay, talk to us about an Elon premium, because it feels to many that actually his own brand has taken a hit here. Has it not, from your perspective, from a venture perspective?
We don't believe so. I think Elon has continued to promise that what he says is deliverable, and what we can rely on is that for him to grow multiple business lines across different industries is something that he succeeded at time and time again. So we continue to have faith in Elon's ability to execute. I think generally when it comes to SpaceX, there's a lot that could go wrong, but overall what we learned through Starlink and everything related to the launches to date is that there's learnings that Elon takes away to build the next best rocket and the best missile launch.
Yeah.
So with that going forward, we have a lot of faith in his ability to foresee that premium.
What about his management style, the way in which he treats people, the layoffs that we're seeing at Twitter? Does that sit well with you?
I think generally we expect layoffs to be occurring in an environment as volatile as this one. I think generally everyone's reducing spend across the board in departments that aren't necessarily hitting, top line revenue.
But
so I think
the way he's doing it, Andrea.
The way he's doing it is obviously a bit unconventional, but I think that nature of Elon is something we all have grown to expect by now. So I think generally we are, obviously keeping abreast of his management style to say whether or not it's fair and good, but overall we do know it's effective. So I think generally there's a lot of takeaways from that, and every CEO that we're working with in the late stage had their own flavor of it, but Elon just comes in, as hot as ever.
Very quickly, would you like to buy into any new round that comes up?
Possibly. We have to do our diligence, but we continue to invest.
All right. Manhattan venture partner Andrea Lamari, thank you very much. Coming up, more about the impact of the FTX fallout with a focus on the world of fintech and fundraising in that space. That's all next. This is Bloomberg.
FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
Ken Griffin there of Citadel, and he was speaking at our NEF summit over in Singapore. We know FTX is in touch with dozens of regulators across the world. We know that the collapsed crypto exchange owes money to more than 1 million people and organization. What's the impact, though, beyond crypto, into the world of fintech more broadly, for example? I'm pleased to say we can deep dive in fintech right now, the fundraising within it, the scar tissue that now exists. Jason Teedy's with us, Global Head of Fintech and Partnerships over at JP Morgan Payments. Also, Brett Turner, founder and CEO of the open banking platform Travata, which JP Morgan has helped fund in its Series B along with other backers. Gentlemen, it is wonderful to have you with us. Jason, just start now with, well, Ken Griffin there talking about the hit to financial markets. Do you see a hit right now? Do you see a hit to fintech in general, the iteration, the innovation?
Yeah, so, obviously unfortunate the situation with FTX, but in terms of broadly speaking, the fintech landscape and the partnerships that can be developed between fintechs and banks, we think those that have, durable business models that are focused on, very specific client needs, especially in the B2B space, we're still very constructive, and we're still looking to develop partnerships with companies like Travata.
And of course, you help at Travata to visualize, to analyze cash flows. And I'm interested, Brett, therefore, in how it was for you raising funds, finding partnerships like you forged with JP Morgan and being able to raise more funds. How hard is it in this landscape at the moment? Never mind the FTX collapse, but, the slowdown in the economy more broadly.
Well, we closed our last round, our Series B, in May, and I've been in startups for most of my career. Been a CFO of 3 venture-backed high-growth startups, and raising money is never easy in any climate. But I think at the end of the day, if you're really bringing the right innovation to the market, if you've got a lot of traction in the market with customers, then it's going to happen. And I think a big part of our story is that we work closely with banks, and we've got 4 of the largest banks in the world as investors in our company because we're building out this next-gen experience to make it easy for businesses to manage cash. So I think because of that too, as we, JP Morgan was our earliest investors when they kind of caught this early as we brought Square as really the first company to connect to a corporate banking API. So I think just given the traction and then what we largely know is fintech, which is consumer and small business. It's starting to heat up on the corporate side. If you look in the last 10 years, debt is cheap. You haven't really had to sharpen your toolkit in terms of trying to go for yield. All those things are starting to change. And then, what we do is, we're bringing out, automating this cash forecasting, which has always been sort of holy grail in finance. So I think because of those things, because where things are headed on the corporate side in fintech, it feels like we're just sort of heating up. So we're fortunate.
Okay, Brett, dig into me, therefore, as you continue to invest, as you continue to iterate, as you continue to make sure that we see this efficiency within particularly B2B and cash analysis. How much do you depend on innovations such as blockchain in any way? Is that something that you continue to depend upon as a future growth forecaster for you?
Well, there's really no dependence. I mean, we've been watching it, of course. We're curious what happens. It's been unfortunate to see things as they've unfolded over the last, especially over the last days, weeks. We have one of our largest customers and our earliest customers, Square, one of the handful of corporates who actually hold block Bitcoin. So we actually can accommodate that, so they can see their Bitcoin holdings in Truvada, which is pretty cool. But for the most part, most corporates aren't. There's been a few that have looked at Bitcoin as a hedge against inflation. I don't think that was a real thing for the most part. So most everybody's watching. And I guess, I was when I started my career was in the late 90s and saw this whole Web 1.0. And I think we'll probably see things, finally getting ironed out for V2 when it comes.
And Web 3 as and when too as well. I'm interested, Jason, therefore, where's opportunistic for you? Where are you seeing the most inbound in terms of further partnerships you can forge? We were just hearing, of course, of a digital dollar, the practicing, the piloting of that scheme happening in Wall Street between certain financial institutions and indeed the Federal Reserve here in New York. What are you thinking of in terms of innovations here?
So, when we think about innovation and fintech partnerships, really, it all starts with the client need. And what we see typically is fintechs tend to be very, very sharply focused on a specific client need. They're applying new technology, sort of a novel approach to solving, an opportunity in the landscape. And so, on one hand, you've got fintechs moving fast, iterating, using new technology. And on the other hand, on the bank side, we have client relationships, client trust, and distribution. And so when you marry those things together through collaboration and using technology like open banking, which is what Truvada is based on, we think it's a situation where 1 + 1 equals much more than 2 when we combine forces.
Talk to us about the global footprint now, Brett. Of course, open banking is something very much embraced in Europe. But how are we seeing this play out globally? How do you see your own footprint expanding?
Yeah, open banking that's been coined really largely what has been happening in Europe with the PSD2, but it's largely consumers and small business. And so now those banks are having to, it's a standards body, it's requiring them to be able to pass client data to the fintech community for downstream applications. But in the US, but on the corporate side, even they don't have to meet the PSD2 standard in Europe. So even corporate banks in Europe, that data is still locked up. On the corporate side, though, JP Morgan, other big banks are building APIs on the corporate side. Unfortunately, there's not a standard, but that's a big part of what we do. We're helping to, we've now got the largest library of corporate APIs, bank APIs in the world. So customers are looking to us to really normalize all that data and really drive a standard. We've got some big banks that are asking us now for a standard spec. So in the absence of a standard, but in the US, the corporate banks have really been leading the charge for open banking on the corporate side. And now as we're trying to lean in and help standardize all of that, it's just making all of that data accessible and speeding up a lot of these next-gen experiences that happen on the corporate side.
Okay, Jason, turn some of that, which, unless you're very familiar with open banking, you don't really know what PSD2 is. Tell me, as a layman, what this means for my future, my banking relationships. What does it mean for the companies that you serve? What does it mean for the individuals that you serve?
Absolutely. So great question. So open banking, you could think of it as essentially a structural change in financial services. And what open banking enables is the owner of a bank account. So whether that be you with your own personal account or a business and their corporate account, it allows and enables the owner of that account to provide access to the data and the services in that account to third parties. And so might sound a little, shocking. Hey, is that scary? Is that risky? But in fact, really, what it does is it enables a whole, suite of new products and services to be delivered with banking and embedded banking solutions within it. And so, on the personal side, you use a budgeting tool for you or your family, and you want to have real-time information come in from your bank accounts and your credit cards and different pay statements into a budgeting tool. That's a good example of a use of open banking on the consumer side. Truvada, a great example on the corporate side, where as a treasurer or CFO, you're constantly trying to get your arms around what is the working capital needs for your business. And so what Truvada has done is used our JP Morgan and other banks' APIs to get real-time data feeds, index that, and then overlay a really elegant user interface for cash forecasting and working capital management. And so those are sort of examples of how opening up access to data within bank accounts can create new value and new products and services for businesses and consumers.
Here's to elegant user faces. Jason Tiede, we thank you, Global Head of FinTech Partnerships over at JP Morgan Payments, and Brett Turner, founder and CEO of Truvada. Ed.
Karen, let's get a quick look at how stocks did on Tuesday. Tech stocks in particular getting a boost from that slower than expected growth in producer prices, particularly software stocks, and also the US listed shares of Chinese tech stocks getting a boost from better US-China relations. This is Bloomberg. Time for your top tech calls, starting with Netflix, reinstated as a buy at Bank of America, $370 price target. A lot of optimism about its international subscription growth, along with video advertising and password sharing boosting financial performance. Take-Two Interactive cut at Deutsche Bank to 122 from 160. Concern about the outlook for growth and no near-term catalyst for a video games company. A little bit worrying with the macro slowdown. Finally, looking at Amazon, initiated with an outperform and a 118 price target. A lot of optimism that we'll continue to see penetration in the e-commerce sector from Amazon. That does it for your top tech calls.
No one does it faster, Ed. We thank you. Coming up, Musk's management style. Look, it doesn't always seem to be in sync with his free speech focus. We're going to discuss that next. This is Bloomberg. Ed, we touched on it at the top of the hour, but we haven't had a deep dive on Elon for, at least 24 hours. So we need to go now to a key scoop that you had earlier today on one of his other companies, right?
Yeah, SpaceX. So according to sources, SpaceX is having early conversations with investors to raise some more money, either through a primary or a tender, a secondary offer, or both. But the important point is the valuation. It could value SpaceX at $150 billion US, which is a pretty big jump from $125 billion where it was valued in May of this year. Of course, as is always the case, early stages, the conditions and terms could change. But the valuation is what we're zeroed in on, right? Because it would once again put SpaceX at the top of the pile when it comes to global tech, private global tech, that is. This is CB Insights data. But if our scoop is right and SpaceX is to be valued by investors at $150 billion, it would retake top spot over ByteDance, which CB Insights says is valued at $140 billion US. Of course, a big story here in Silicon Valley and beyond has been a pullback in valuations for particular names. You look at Stripe, for example, at $95 billion. Currently, a few names are missing from that table that had or would have previously been there. It's also all about Starlink. Remember what Elon Musk has told us about Starlink. The company will need to invest $20 to $30 billion long term to keep Starlink competitive in the constellation-based internet space, but also the long-term future of this company. Musk has talked about sales of the launch business topping out at $3 billion a year. The Starlink business could see annual sales of $30 billion a year. So it's interesting to see SpaceX continue to raise money or think about it and probably invest back into this part of their business, Starlink.
Let's stick with Musk, because he is, of course, the world's richest person, Ed. And also, we want to talk about Twitter, his where he's apparently sleeping on the floor now. He's cracking down on internal and external dissent over at Twitter. According to sources, he's actually fired a dozen or more employees that have been openly against his management style, sometimes doing it via a tweet. Let's bring in Bloomberg's Alex Barinka in Los Angeles. And Alex, I mean, so much for free speech absolutist. It feels as though you can't have free speech if it's about Twitter and his management style.
That's right. And if you do, or if you point out that maybe some of the conclusions Elon's drawing about the product are wrong, you might essentially be fired over Twitter out in the public. Over the last few days, Bloomberg has reported that close to a dozen employees who have either tweeted that some of the tweets that Elon is posting are not exactly correct, or not seemingly posted enough support for what Elon is doing internally on their internal Slack channels, have actually been let go. So it is quite the juxtaposition for a man who, when he bought this company, said that free speech comes above all. Apparently, just not when it is against the calls he's making internally at this company.
Alex, Caro alluded to it earlier, but Elon Musk has got a lot on his plate at the moment, it seems. Here's what the world's richest man had to say about that.
Oh, man. I have too much work on my plate, that is for sure. I mean, I'm really working at the absolute most amount that I can work from morning till night, 7 days a week. So this is not something I'd recommend, frankly.
Musk speaking there at the B20 conference in Indonesia. A lot on his plate, working too hard. What do Tesla investors think about that?
I mean, I think that folks might take some pause here, right? He is the man who has showed up on all of the calls on behalf of Twitter, either alone, as was the case with activists just last week, or with a few executives who are now no longer or had left the company and were asked to come back in the case of advertisers. So he clearly, is representing what we know about Elon Musk and the management style he expects internally. He's already worked to shift the culture at Twitter itself, moving the company away from things like having an extra day off a week, expecting folks to be in the office at all times, applauding the same level of work that he seems to be kind of submitting here. So between the layoffs or the firings of folks who speak up against some of his assertions and kind of the tone he's setting for this company, one thing is definitely clear. I think the folks who stay at Twitter are going to probably have to change to keep up with that culture, or else they might be the next people out the door.
And what about, the product itself, Alex? The coding freeze, the worry about whether, with all these people leaving, it can function as it should.
And I want to point out that code freeze. So basically, a code freeze is where engineers are not allowed to push new things onto production. This happened over the weekend, our sources told Bloomberg. Not only are they freezing pushing, but engineers right now actually can't write code either, which is kind of the most stringent code freeze we've had. It's a quick reversal from the 70s prior, where you saw Twitter launch badges for paid subscribers to everyone, launch new official tags, take those away. So there's a lot of tumultuousness, not only with the staff that are still there, but actually with the product that is out in the wild. And remember, Twitter makes all of its money from advertisers. Advertisers are kind of allergic to uncertainty or chaos. And right now, between firing people on Twitter, the code freezes, kind of the flip-flopping on the direction of the product, you would think that if you're also an advertiser, this isn't a really good look for them to be putting out to the people that they're asking to spend money on the platform.
I have to say, what amazed me, though, when we sat down with Andrea of Manhattan Ventures Partners, MVP, right. She said, look, it's unconventional, but we continue to back him. Alex, has he lost some of his allure? Has his own personal brand been hit if he's still able to raise money like he is for SpaceX?
I think that this kind of Twitter saga will tell. SpaceX, the folks were betting on that business. I also look to the debt from the Twitter deal that even before Elon used that bankruptcy word at an employee meeting was looking to be sold for 60 cents on the dollar. So I think that this will be a big legacy moment for him. Is he the guy who can come in and not just kind of create a transportation company that is something to be envied, but, use those skills on the social media company. Right now, I think there are a lot of skeptics. He is doing this in private with Twitter as a private company, so we won't have that gut check from the public markets like we might could be able to when Twitter was still a public company. But I think that the jury will be out, and this seems like a big make or break moment. Does Elon Musk's kind of go, 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 always on, do so much of everything attitude and expectation for his company to operate the same way, is that going to be kind of the key to success here at Twitter? This will be kind of a big moment for him as we look, a decade on. Who is Elon Musk and kind of what did he do in the tech world?
All right, Bloomberg's Alex Barinka, thank you. Kara, I want to bring you some news that we broke here at Bloomberg News in the last hour or so. Apple CEO Tim Cook says the company's made a decision to source chips from Arizona. Bloomberg's Mark Goerman joins us from Los Angeles. Mark, what are you reporting?
Well, first of all, Ed and Caroline, congratulations on the relaunch. I'm happy to be here in the opening week. So what we've learned is that Apple is going to diversify its supply chain and start sourcing chips out of Arizona and at some point out of Europe as well. He made this disclosure in a meeting in Germany. Apple executives, along with Eddie Q and Deirdre O'Brien, recently went on a European tour, several countries. They met with engineers in Germany and retail employees there. Cook was asked about this, and that was his response, that they are going to move into Arizona as well and Europe. As we've reported many times, TSMC is working on a plan to open in the state in 2024 at some point during that year. But Intel and others are also, eyeing that state. But our belief is that Apple, TSMC will begin working together on chip production about 2 years from now in the U.S. So clearly a big deal as part of the diversification efforts.
And also a big deal for the administration with the Chips and Science Act, Mark. How much of this is to do with some of the incentives that perhaps are a little bit more alluring here in the US now?
I think the incentives was sort of the beginning of this process, or a really key part of the process, right? The incentives helped bring more chip production back to the US, also helping likewise in a similar fashion in Europe. And it's obviously a very clear message for TSMC to gear up its partners to really do output in more regions. And of course, Apple is going to want to be part of that. Obviously, US manufacturing is a very good thing for Apple from a PR perspective, but more importantly, from a strategy perspective. Cook said in the meeting that it's not a strategic position to be in to have 60% of the world's semiconductors coming out of one place, that place happening to be Taiwan. So for Apple, diversification is a very good thing, right? Imagine the impact if all of the Taiwan facilities for Apple's chip production went out, right? The chip, arguably, is the most important component across Apple's entire product portfolio, right? They use the same core chip technology on all of its Macs, watches, AirPods, iPhone, iPad, Mac, you name it, it has a chip in it. And so it's very important to have that most critical component diversified globally.
Well, Mark, very quickly, there was evidence in the most recent earnings that the latest generation of chips in products outside of iPhone are actually driving sales. Talk to us about the chip strategy from the technology side.
Yeah, so the chip strategy is interesting. Right now, Apple's on a 5-nanometer process. They are going to start shifting to a 3-nanometer process, probably at the end of next year. This TSMC plant, according to what TSMC is saying, is really going to only start at that 5-nanometer technology. So it's possible that the chips initially produced in Arizona at that point will be more legacy, will be older chips. But eventually, you can expect the tech in Arizona and elsewhere to catch up with where Apple wants to go, which, as you know, is the most advanced, most expensive, highest performing cutting-edge processors you can get on the market.
Mark, thank you. You're such a gentleman. Thanks for coming on and supporting us in our first couple of days and bringing us all the scoops, as he always does. Meanwhile, coming up, how regulators are moving on crypto policy after the FTX fallout. This is Bloomberg.
If you're being shown a balance sheet that may or may not be accurate, if you're being shown income statements that may or not be accurate, that are being validated by third parties, that's pretty rough. That's very hard to see through. If you're running a background check on somebody like Sam, you're not going to find anything. He was unblemished, if you will, prior to this incident.
Anthony Scaramucci there of Skybridge Capital. Just some reflections on his work with Sam Bankman-Fried and FTX. That was at our New Economy Forum Summit earlier. Meanwhile, another crypto player, BlockFi, reportedly back on the verge of bankruptcy. We're now joined by Bloomberg's Shonali Basak, who's got to be one of the hardest working people on Focus on Tech. And Shonali, the interesting point here, of course, is that BlockFi was previously being bailed out by the White Knight that now no longer exists.
And certainly they're not the only one. They are on the verge of bankruptcy, preparing for it, according to the Wall Street Journal. But then you also have Voyager, where the bankruptcy lawyers had said during a proceeding that they are shocked, disgruntled, dismayed that they have to really call this deal with FTX void. What then happens to Voyager and its assets and any potential suitors that could help save the assets out of bankruptcy as well? Let's talk about FTX and the bankruptcy details itself, because of course the details are very, very sparse. But what we do know is that they could involve 1 million creditors. In the coming days, Caroline, we will know what the top 50 creditors will be. That will be very interesting information revealed in the documents as they come out. And of course, what we also know is, in addition to the new CEO, there are new board members assigned. And back to that conversation we've been having from the beginning, why was FTX operating without a board held accountable to its existing investors?
Shonali, this week, Caroline and I have had conversations about FTX. They join voices like Ken Griffin asking, where have the regulators been throughout this entire process? What happens from that point now?
Two things here about that statement. One being that Ken Griffin, you have a lot of people in the crypto industry saying that investors will come back, they will be fine. But Ken Griffin, who, as we know, Citadel Securities, Ken Griffin himself had been thinking about crypto and the role of crypto in the broader financial markets. And in that conversation with Bloomberg's New Economy Forum, he was very dismayed about not just what it meant for the crypto industries, but what this debacle had meant for financial markets. On the regulatory front, you have many regulators. Let's take CFTC Chair Rostin Benham, for example, saying just yesterday in an interview with Bloomberg reporters that he hopes that this will help Congress push forward in a quicker way when it comes to crypto regulation. I also want to talk about supervision from the Federal Reserve, because Fed Vice Chair for Supervision spoke today at the Senate Banking Committee. Listen quickly to what he had to say.
Another priority is monitoring the risk of crypto asset-related activities. Crypto asset-related activity requires effective oversight that includes safeguards to ensure that crypto companies are subject to similar regulatory safeguards as other financial service providers.
So a lot of talk, still a lot of uncertainty, but still what will have to be made clear here is what jurisdiction does the SEC have, what jurisdiction does the CFTC have, and does the U.S. government have any role in backstopping any of the customers, because none of these institutions are FDIC insured necessarily.
What about self-regulation? What about changes to the ultimate crypto industry right now?
Something a lot of people are talking about are proof of reserves, which is essentially a form of accounting by a third party, especially, that will help, or self-done if you're talking about DeFi networks, but really a sense here to figure out whether everything is being held that is said is being held, and what are those assets held in. This will be interesting. Why? Because we're watching many exchanges coming to the surface saying that they will do this. How fast will they do this? Who will they hire to do this? And how can they prove that they are more trustworthy by doing this? And is it enough, I think, is a very important question. Will proof of reserves fix the industry after the dent of confidence that FTX had instilled in its customers?
All right, Bloomberg Shonali Basak, busiest person in television, I imagine, right now. Thank you. Coming up, a payments giant from Asia makes its way to the US with its latest acquisition. We'll have all of that next. This is Bloomberg.
It's the one-stop payments platform in Japan and Southeast Asia, and it's entering even more forcefully the US market, acquiring a Georgia-based Merchant E, we understand, for around $400 million. Now, the combined company helps process payments for about 20,000 companies. Here to discuss is the Open founder and CEO, Jun Hasegawa. Thank you so much, Jun, for joining us very early for you in Asia, and we thank you. Talk to us about the global perspective here. What is it that Merchant E brings you that you couldn't grow organically?
Yeah, maybe first of all, using the 2 seconds to walk you through what we are doing. So we are a digital payment company original from Southeast Asia. And then this acquisition of Merchant E has brought us up to step closer to become a global payment the company. And we provide an end-to-end payment processing for B2B customers and then also the financial institution to help them growing their businesses. And then this Merchant E that give us ability to onboarding the U.S. merchants to expand in Southeast Asia, the countries, and then including Japan.
June, this is a non-US company buying a US company. Let's get the formalities out of the way. You confident that this deal closes without any problems?
No, we are pretty confident about this new merger acquisitions. We just announced it yesterday, so we still near term. We want to be sure post acquisitions, the merger, and then onboarding all the product into our ecosystem, and that's our focus. But we are pretty confident to become the global payment company.
Will you be reviewed by CFIUS? Will regulators have to take a look?
Yeah, so we always comply with all the regulatory the requirements, and then also, as you know, we already operating among the Southeast Asia country, and each country has different regulations, and we have a very strong the compliance team and a legal team to make sure we operating according to the book.
Talk to us at the moment, June, about, well, innovation, the focus on where you go now in terms of open payments, global payments. Many of us might think, oh, that would be an opportunity for blockchain technology, for crypto. Has that in any way engulfed your conversations, the fallout that we currently see?
Yes. You know, I was in the blockchain industry. Currently, I'm not. But what I can say is the blockchain technology is enable peer-to-peer the payments, especially you know, in the Southeast Asian countries, infrastructure is very the silo. It's not really interoperable. But the blockchains enable interoperability to accepting the payment, also the send the payment. So I've seen a lot of opportunity in there.
June, Stripe made layoffs. They gave us some worrying signs about the strength of the payments market in the US. Are you worried about the strength of the payments market here in the US?
I would say macroeconomic perspective, maybe. However, as you can see, the day-to-day, you know, the people's the behavior, right? Every one of us using the payment every day to purchasing something, the service, product, whatever. So payment is always needed, and then there's a demand. So if we really cautiously controlling cash flow, always the people that secure the job, and then we can sustain our business strongly.
Yeah, so talk to us, as you bring on board another company, do there have to be layoffs, or is this something that you continue to build with the people, the talent that you take on board when making a purchase such as this?
Oh, that's a very good question. Answer is no. We're not going to lay off anyone. We are really want to be sure everyone having sufficient work with, you know, and then also I believe we have a great talent in our company, even for the Merchant E. So we'd like to collaborating more and then growing our organizations. And then, of course, expanding in some other regions, such as Europe and then Latin America.
All right, Open CEO June Hasegawa, thank you. I mean, Caro, for me, the world such as it is, payments such as it is, interesting time to see a $400 million deal of this type.
Yeah, and we've had such a fintech flavor to the entire day today, talking, of course, with JP Morgan's fintech partnership lead, really talking about the stability there are in certain opportunities, the deals still to be done. I'm sure, though, in the crypto area, maybe we're just dialing back some of that exuberance about writing checks.
The world needs money to move from A to B, and they want more technology to do it.
Digital dollar, Ed, digital dollar.
That does it for this edition of Bloomberg Technology, Caro. Wednesday, we have the CEO of Cerebral for an exclusive interview.
You do not want to forget, of course, to check us out on your podcasts as well. You'll find it on the terminal, online on Apple, Spotify, iHeart. In fact, go check us out on Twitter. Go check us out on Instagram. Come find us on TikTok. We are truly a socially aware program now, and we're sprinkling ourselves wherever you happen to be viewing. From beautiful San Francisco and from here in New York, this is Bloomberg.